What's up, guys? How are you? I thought I'd just jump on real quick this morning and talk through two specific things that I think are affecting the Bitcoin market. The first is that the macro environment is not out of the woods yet. We saw yesterday Jerome Powell, chairman of the Federal Reserve, talk about the fact that the economy is starting to reaccelerate. Everyone seems to be getting more excited. You're starting to see people say, oh, we're not actually going to go to a recession. Well, that seems good for the consumer and for companies. That's exactly what the Federal Reserve doesn't want to see. If they think that people are going to go out and start spending money again, or if they think that the consumer doesn't believe a recession is coming, then of course that is going to add to the inflationary pressures in the economy. And therefore, the Federal Reserve will have to continue to increase interest rates to get inflation under control. That's the weird thing about an economy, is that expectations a lot of times can drive reality. And right now, there's a very different vibe than it was just 3 or 4 months ago. 3 or 4 months ago, everyone was talking about the fact that a recession was coming. Everyone was fear-mongering. Everyone was saying how bad it was going to get. It was the end of the economy as we knew it in terms of that loose monetary policy. But now all of a sudden, people are really bullish. They're starting to go back into the stock market. The S&P is almost near an all-time high. And then we see other assets like Bitcoin or real estate, etc. Bitcoin, it's up anywhere between 50 to 80% on the year. Real estate in a lot of markets hasn't actually gone down as predicted. And so the central bank's paying attention to that stuff because that is where they are going to see inflationary pressures come back. On top of that, they look in the labor market, and the labor market's still really strong. We're near historic lows when it comes to unemployment. And so they feel like they've got a lot of runway to continue to increase interest rates and kind of punish consumers and companies until inflation gets under that 2% target. Now, whether they actually raise interest rates or not, it's important to pay attention to what they're saying, because usually they do a good job of trying to go ahead and tell you, this is what we're thinking and this is what we're going to do. Now, of course, things change. As we saw, they were predicting 0% interest rates for years and years, and then all of a sudden they jacked them up 500 basis points, and that's why so many people got caught off sides. But it is important to pay attention to what the central bankers are saying, because whether we like it or not, human-led monetary policy is the default policy today, and that is what is ultimately going to drive the cost of capital, and it will determine a lot of people's actions in the market. My guess is that Bitcoin's price won't drastically recover from here until we get some sort of rate cuts and we get some sort of loose monetary policy. I could be wrong, but that's my thought process today. Now, the second story that caught my mind this week was the fact that the country of Oman has now come out and publicly talked about the fact that they have a Bitcoin mining facility that is using excess power from their grid. The reason why this is interesting is because they've sunk about $370 million into it. They plan to invest up to $1.1 billion into the facility. And there's all kinds of cool things, liquid immersion cooling, etc. But ultimately, what we are watching is we are seeing countries that have old world economies that are dependent on oil, etc., and they want to have a digital transformation. And so a great way for them to do that is to do Bitcoin mining. Now, there's not the first country to go ahead and say, hey, we're publicly mining Bitcoin, but it is another country that, again, may be small in the grand scheme of things, but it is a sign of what is to come. And so anytime that you have Bitcoin's price down more than 50%, and you have countries coming out publicly and saying, hey, we've been making this huge investment and now we're bringing it online, they don't care about the Bitcoin climate. They don't care what is the price. They don't care what is the mainstream narrative right now. These are countries. They're simply going to come out and do and say what they think is best for their country. I think that's pretty cool. So whether you look at the macro environment or you look at these data points like these countries that are still investing, still going forward with plans around Bitcoin mining, I tend to think that we're in the boring phase. This is where we just kind of go sideways for a long time. It's very easy to get distracted. It's very easy to kind of lose excitement. But ultimately, what we have seen in past cycles, right? History can be a guide for the future, is that if you can withstand the boring period and not do anything too crazy in either direction, then it'll probably end up being okay. So don't get caught flat-footed. Don't sit around and just say, oh, it's over because it's just going sideways and it's being boring. As we all know, Bitcoin can wake up at any time in either direction. And so seeing that the macro environment, kind of where we are there, and seeing that countries are now coming out publicly and saying that they're mining Bitcoin, pretty big deal. Hope you guys had a great week, and I'll talk to you guys next week.